Welcome back to Financial Analysis for Nonprofits. All right, this is week 4, more than halfway through the program now. Hope everybody is doing well. Today, we have the IRS Form 990 and what the IRS wants to know. It's going to be a little bit of a meaty presentation today, but there's a lot to cover, so I'm just going to jump right on in. So a couple things to remember about the IRS Form 990. First off, this thing is a tax document. As I mentioned before, it was not designed as a nonprofit management tool. Our goal here is to try and figure out, just like we did on the audits, how can we pull out the same information that we need off of the 990s like we did on the audits. All right. So a couple other things around the 990 we should just understand. One, you really have to have at least $200,000 in revenue and assets from everything we own of more than $500,000 to fill out the IRS Form 990. There are other forms called the 990EZ and the 990N, often referred to as the postcard for smaller organizations. But again, this is a tax document. But that means there's some organizations that don't file the 990. First off, if you're a fiscally sponsored organization or you haven't received your IRS tax status yet, faith-based organizations, right? Churches, mosques, synagogues, none of those file 990s. State institutions, if you're the State University of California, you're not fine because you're part actually of the state. And if you're a subsidiary, if you're the local chapter of a national organization, again, usually the 990s filed by the national organization. So a couple notes though, particularly, so that's just some facts there. What I want to talk about right now is that a couple things. First off, remember we had always said that all revenue is accounted for in the year it was pledged, whether or not it was received. And that definitely, you'll see that on the 990. And again, they are looking for total new revenue coming into the organization. So they don't track any net assets that have been released because they recorded that in the year that it was pledged. So even though you may get to use those funds today, they're not going to be showing up on the 990. The other thing is, again, it is only looking at total revenue. It makes no distinction whether that revenue was restricted or not. If it's in a cookie jar, it's in a safe, or it's unrestricted, the IRS treats it all the same because, again, they're not really concerned about this issue of restriction. They're trying to figure out the total amount of new money that came into the organization. And so oftentimes 990s require additional context. People think they understand what the document says, but in reality, it's very easy to misinterpret the IRS Form 990. So let's look at a couple things here. I am going to hide this. And so first off, this is the obviously the tax form for the IRS Form for Homeboy Industries, the same group that we're looking for. Now, whatever the year you see here for the 990, that was the year that started your fiscal year. So if you have one of those July to June fiscal years, the year will be recorded as the start of your fiscal year. Although we often, like for us, we have an October to September fiscal year. So we have a 22-23 budget. The 990 will count that as a 22 because our fiscal year started in 2022, but we refer to it oftentimes as the fiscal year 23 because we talk about when it ends. But the IRS is talking about when it starts. So here's your tax exempt status. It might be a 501c3, but there are a lot of other tax exempt statuses besides just 501c3. So there's a couple here, but there's a whole list of how many different tax exemptions for nonprofit organizations. And then what I mentioned, I think in week 1, right? You are a corporation. How do I know that? The IRS says so right there on the front page of your 990. What type of form of organization? Check. I am a corporation, just like every other corporation. You just happen to file under a different section of the IRS tax code. All right. So most people, when they open up the 990, the first thing they look at is part 1, the summary on page 1. And this is much like the income statement or the statement of activities on the audit. except there are, again, some key differences. Just like on the audit, they break down contributed revenue versus earned revenue. And then they kind of, again, total up the revenue. But remember, you don't see any distinction here. There's no with donor restrictions. There's no without donor restriction. It just all gets mushed together. It's just that total column that we have on the audits is what's showing up here. Then we have our expenses, and the start of the 990 kind of breaks these down into some odd categories. Grants, if you're re-granting, here's all the salaries, and then like here's all, they lump everything together in other expenses. So line 19 is our surplus or deficit. So if you're ever looking for your surplus or deficit, the revenue less expenses, they don't call it surplus or deficit, right? But that's what it is, or the change in net assets. And we have the same number here. Here's the current year, which is 2015, and this is the prior year of 2014. And you'll notice right here, we'll talk about this in just a second, but this is the same number that we saw in the audit. All right. There are lots of pages to the 990s. There's 990 has a bunch of different information. I'm going to point out a couple of key pages that really matter to us in terms of financial analysis. Part 8, which is on page 9, which is our statement of revenue. This breaks down how it's basically the top half of our income statement or statement of activities. All right. It breaks down the types of revenue that we have, and you'll see something called unrelated business revenue. Basically, if an organization does something that generates revenue from something that's not really associated with the mission business, the only thing is it's not illegal. What happens is the IRS actually taxes that revenue at the standard corporate rate because it says it's not revenue that you generated trying to accomplish your charitable purpose. It was revenue that was generated for some other purpose. So they have this category. Sometimes people are concerned about unrelated business income. It's totally legal. There's no problem with it. It just gets taxed because, again, that's what the IRS does. It's a tax collector. All right. At the top of your statement of revenue, our contributed revenue, government, other sources. Where's our contributed revenue coming from? Then they have their program revenue or earned revenue if they charge for their programs and services, which Homeboy does not. And then there's other earned revenue, interest, royalties. Father Greg, when he's out there and he's going a book tour, the royalties and everything they get from the books, they go back to Homeboy Industries. So there's a whole bunch of different other revenue that comes down, but basically it's very, very similar amounts of revenue as we saw on the income statement of the audit. The 990 basically breaks the income statement into two different parts. First, they look at revenue on part 8, which is page 9. And then they look at expenses, which is part 9, page 10. And much like they have, we didn't look at the statement of functional expenses for the audit, but if you have the Homeboy audit, you can see that the statement of functional expenses they have is going to be similar to what this is. Again, we have money that is re-granted. If you're a re-granting organization, the money passes through. The IRS kind of accounts for that. Then they have their salaries and personnel costs. And then they have other kind of, what they call professional services or professional fees. And then they have the most of the traditional kind of operating expenses that the organization has. Now, statement of functional expenses, it really isn't that all exciting. It's for most nonprofits, 70% of their expenses is personnel, and then everything else is kind of, here and there. So there's not a lot that you can get from this. The main piece that you want to see between your revenue and the expenses is your expenses keeping in line with changes in your revenue. As your revenue grows, as the expenses growing at a like rate, or if your revenue is dropping, are your expenses being cut? So this is most helpful when you're looking at data over a couple of years and you can kind of see what are the trends, what's increasing, what's decreasing. Here, you just have 1 year snapshot. And so there's nothing really to compare this to. But if you want to know how much they spend on travel, you can find that out here. And then the most important part of the 990, the page that you should tear out and focus on, is part 10, page 11, because that is the balance sheet, our favorite financial statement, the statement of financial position. And again, right, we have our assets with our cash. Now they break cash into two separate line items. They actually break it into more line items. They have this kind of actually what's in cash and what's in kind of savings or short-term investments like CDs and things like that. They also list down here all of if you have investments that are usually invested with like an investment company versus what's in your bank. They have your property and equipment, just like they do on the audit. And then over here on our liabilities, now remember when we looked at the Homeboy audit, we talked about their debt, their mortgage, and that is line 23 on the balance sheet. Part 10, page 11, line 23 is their building. And just like we saw on the audit, you see this increase from one year to the next. And remember what also increased besides when they're building. Oh, sorry, let me go back. So remember this was where they purchased that building, went from 7.5 to 8.6. And then they had a corresponding increase in their mortgages. It went from 700,000 to 1.1 million, right? Because they took a mortgage out on that new property they just bought. And then really the most important line. So if you're going to write anything down, jot this down. Part 10, page 11, line 27. That's our haiku for today. That is really the key line that you want to focus in on. And I'm going to show you why in just a couple minutes. All right. So those were the key parts, right? The first page summary, the statement of revenue, the statement of expenses, and the balance sheet. They're really the four key financial statements. Everything else is basically showing more, taking those items and breaking them down into explicit details. So the rest of 990, again, tremendous information. You can go online and learn a lot more about the 990. I'm really focusing in on these kind of key three questions that we've been focused on, just like we had on the audit. So a couple things to notice here, right? Again, I'm going back now to part 1, page 1, the summary. That is very much like the income statement that a lot of people, honestly, this is where probably most people just stop. They come and look at this front page of the 990. Maybe they go to see what people, the salaries that people are making, but this is really it. And if we look at this number, this negative 298,000, we've seen this number before, haven't we? Yes, that's right. It's the exact same number that was on the audit. Remember, I said the total column of the audit is the same as the front page of the 990. Proof right there, bang. Now, is it going to happen every single time? No, because sometimes the way the 990 calculates revenue expenses is slightly different than audits. And so these numbers can be different. And in fact, if you actually look at the revenue numbers, how much revenue came in and expenses, and compare that to what's on the audit, you see there's a difference between the two. So part of your homework is to see if you can figure out what is the difference. Why does the revenue and expenses on the 990 not match what's on the balance sheet, but the surplus deficit does? The bottom line of the organization is the same on both cases. What's going on there? That's for you to find out. All right. So when we're thinking about operating performance, when we're thinking about total operating performance, looking there on the 990 is the equivalent of looking at the total column on the audit. And did I say that's where you should be focused? No, I explicitly said that's what the accountants in the IRS want, but that's not what you need as a manager, right? That's not the data you need. You need that other column, this unrestricted or without donor restrictions. How are we going to get there? Oh, come along, let's find out. All right, the answer to that question, the answer to, did we bring in enough unrestricted revenue to cover our expenses, does not sit on the summary, the income statement of the 990, doesn't sit with the statement of revenue, doesn't sit with the statement of expenses. It sits on the balance sheet. So how do we know this? How can we figure out? If you remember in week 1, I was talking about how the different statements are linked. And I said, that a surplus is an increase in our net worth. You remember that? And then I talked about a deficit meant we take money out of our savings and it's a decrease in our net worth. A surplus, increase in our net assets, deficit, decrease in our net assets. So if we look at our unrestricted net assets, just like we do on the audit, right? We're going to look at that same column on the 990. And that is this column here, part 10, page 11, line 27. Right? That will tell us, did our unrestricted net worth increase or decrease? And so we take the left-hand column, which is column A, right, which is the beginning of the year. And then we have the column on the right, column B, which is the end of the year. So our formula is fairly simple. In fact, I'm going to get out my little highlighter here, right? We take where we ended the year, we minus where we started the year, and the difference is the change in our unrestricted net assets, correct? Line 27 says unrestricted net assets right there. And if it started the year at 6 million, it ended the year at 6.5 million, it increased, right? Absolutely. So what causes an increase in our net assets? Oh, that's right, a surplus. Exactly, exactly. You guys are good. All right, hold on, let me get rid of my little laser pointer here. All right, so when we looked at remember the audit, we looked at this, we looked at this 2 weeks ago. But again, when we make that subtraction, when we make that change, right, you'll see, let me go back a slide just to show you again. What's the number here? 478,595. That's how much our net unrestricted net assets increased from the start of the year to the end of the year. And sure enough, that was the exact same number that was on the audit. So if you want to figure out, did we have a true unrestricted surplus or deficit? Don't worry about page 1. Just like I said, don't focus on the total column of the audit. Don't focus on page 1 of the 990. Where you want to focus is what was the change in our unrestricted net assets. Now we're kind of backing into that. That's a backward way of figuring out, did we have a surplus or deficit? But I didn't create the 990. So if I did, I would have changed how we did it. But anyway, so you can see though, this number equals this number. So can we get to the same data point, right? So on page 1 of the 990, the audit, we saw the negative 298,000. But on part 10, page 11, line 27, we see the unrestricted surplus or deficit, which is almost 500,000. Now, on the financial analysis worksheet I'm sharing with you, it shows you how to make this same calculation off of the 990. So it will make these calculations for you as well. But this is a very big distinction because so many people look at the 990 and only look at that front page and say, oh, they had a deficit. Oh, poor group. They're bleeding money. I don't want to give them money. Right? Versus understanding that the real answer to that question is buried deep on page 11 in the 990. So again, same financial documents, the 990, right? But if you look on page 1, it tells you one thing. If you look on page 11, it's going to tell you something else. The truth, though, sits with our unrestricted net assets. That tells us how much did we actually cover our operating expenses. So that's our key takeaway from looking at the 990. Now, when we look at this, if we look at the audit total, and then the part 1, page 1 of the 990, again, I mentioned that the revenue and expenses are different, but the surplus deficit, the bottom line, is the same across each. So part of your homework is to figure out what is these differences it's obviously offsetting. They took it both out of revenue and expenses. So what's going on there? See if you can figure it out. Then we look at the audit, the unrestricted column, and then we look at the IRS Form 990 on part 10, page 11, line 27. You should get a little tattoo with that on. There you go. Again, this tells us the same change in net assets. So for us, you can get to both of these same answers off the audit and off of the 990. And that's the real key piece that I wanted to show, because again, if you're looking at the 990, you can still get to the correct answer, which is 478,000. So did Homeboy Industries bring in enough unrestricted revenue to cover their operating expenses? Yes, they did. And that's how you figure it out. If you look on page 1, you think they drove off a cliff and they're bleeding money. And it's not an accurate representation of the financial health of the organization. So 990s ain't all they cracked up to be. So many people say, oh, it's on the 990. It's the gospel truth. Well, not really. So the other thing so that was operating performance. What about this liquidity calculations? Yeah, because I know how much fun we had last week calculating those liquidity rates. So how can we do the same thing off the IRS Form 990? Again, this difference between all cash and this unrestricted cash. So how can we make these same calculations? Well, there's going to be a slight difference here, but basically it's the same idea. We take from IRS Form 990, which is part 1 on the summary, we take their total operating expenses. Now in this case, it's 14.1 million, not 16.5, which is on the audit. But that's again, you'll figure out why that difference is. If we take that, we divide it by 12 months, the average monthly expenses is 1.1 to almost 1.2. Very, very similar to what we saw when we did the audit, but there's again, a slight variation. All right. So in this case, when we want to look at total cash, the 990, instead of putting it on one line like they do in the audit, they're like, nah, let's break it over 5 different lines. So you're going to have to go hunt and peck to find all the little buckets of cash, because it could be under cash, non-bearing, which is basically your checking accounts, although even they savings, which could be, again, just a savings account, or short-term investments like CDs, or it could be in longer-term investments. We have our board designated reserve at an investment management company, not at our bank. And so but that means we have cash there. So you might have cash in these line items, you might have cash in these. So you have to add up all of these line items to figure out how much total cash the organization has. So in this case, it totals 2.3 million, which is the exact same number that we saw on the audit. The audit's balance sheet and the balance sheet on the 990 actually match very, very well. Again, some slight differences, but usually those two things are fairly transferable or fairly equatable. So we have 2.3 million in cash, according to our 990. We spend 1.1, almost 1.2 million every month. How many months of cash do we have? Drum roll, 2. Last time it was 1.7. We said about 2 months. Same thing here. It's about 2 months. So the 990 gives us about 2 months of cash. The audit gives us just under 2 months of cash. Very similar numbers. Again, some slight variances on how the 990 accounts for certain items. So that's all you would need to do to figure out months of cash. Just like we did on the audit, it's simply finding a total amount of cash, dividing it by average monthly expenses. Easy peasy. Now, we're getting back to our friend Luna and our buckets of adult beverages, right? So again, how can we make this calculation by taking out the bottles just like we did on the audit? How can we do that on the 990? Well, we're going to stay on part 10, page 11, the balance sheet. And first thing we're going to do, just like we did on the audit, is what is our total unrestricted net assets? And what line is that? Oh, yes, line 27, part 10, page 11, line 27. Hey, there we go. Perfect. And there again, 6.5 million, just like we saw on the audit. And we're going to find the building. We're going to minus out the mortgage, just like we did on the audit, right? It is the exact same calculation, exact same calculation. And lo and behold, we end up with pretty much the exact same number, right? $886,000 of negative liquidity. Again, negative liquidity means we're trying to keep cash in the organization by oftentimes delaying paying our bills and vendors, or temporarily borrowing from our restricted assets to keep assets going, right? So, or to keep operations going. So we calculated months of cash. We calculated Luna from part 10, page 11, the balance sheet off of the 990, just like we did on the audit. And the financial analysis worksheet tool I have, again, there's a tab for audits, there's a tab for 990s. You just type in the numbers and it'll calculate the ratios for you. But I just wanted to show that you can indeed pull the same exact data points that you need as a manager from the 990 as you did from the audits. Now, again, if you have audits, I would always recommend using audits, but if you're too small or your organization doesn't have audits, you can get the exact same information off of mainly the balance sheet of the 990. All right. And again, when we went back and we saw how we did it from the audit, which is right up here, it was the exact same calculation, exact same calculation. So the balance sheet on the audit, the balance sheet on the 990 matches perfectly. God, amen. All right. So that was our rapid fire tour through the IRS Form 90. A couple key things, right? Page 1, part 1, the summary. Very similar to what we have the income statement on the statement or the statement of activities on the audit, but it only includes that total column. It doesn't make any distinction between restricted or unrestricted. It doesn't include net assets released from restriction. So there's a whole bunch of problems. Just like I said, don't look at the total column on the audit. Don't look at just part 1 summary of the 990. All right, so you want to check out, if you want to have more information about their revenue sources, check out part 8, page 9, which is a statement of revenue, or you can check out part 9, page 10, which is the statement of functional expenses if you want to get some more details about their expenses. But that's usually not very exciting. But the key page is part 10, page 11, which is the balance sheet. Off of the balance sheet, we can calculate the unrestricted operating performance by looking at the change in line 27 from the start of the year to the end of the year. Did our unrestricted net assets increase or decrease? If they increased, we had a surplus. If they decreased, you had a deficit. And you make that calculation, it will be the exact same as on the audit. And then we are able to calculate months of cash and our Luna all off of part 10, page 11 of the 990. So we can get all of that great juicy data from one page of the 990. So you can also get the total surplus or deficit if you look at the change in total assets, total net assets from one year to the next. So part 10, page 11 of the 990, that really is where you need to be focused in on, because that really tells you almost all of the information you're going to need, at least in terms of the analysis we're going to be doing in this workshop, in this class, in this course. All right. So, it's much like we did with the balance sheets. Oh, this should say, excuse me, this should say 990s. I have the wrong title here. So ignore the title on the top of the slide, but focus on the text on the slide, which is, when you were in the readings, in the videos, and the other things you did, and the highlights here, what were some things you discovered about the IRS 990 that you didn't know? What was the one thing that you wish donors and funders would understand about the 990? And I've kind of given you some hints and some clues as to what that is, that you wish that they would really understand when they're looking at that document. Then, another quiz. That's right, ladies and gentlemen. We're going to have a quiz on the 990 and the 990 of Tree People. The same quiz that you looked at for the income statement, the balance sheet. We're going to do the same organization for the 990 in Tree People. So again, 10 questions. The 990 is available there online, so you can take that quiz. And then a written assignment. And here is that idea of, remember, there was this difference in terms of the revenue and expenses, yet the surplus deficit numbers were the same, right? So looking at that, what do you think is the difference here? How is the IRS calculating something that the audit doesn't? And as a hint, I'll give you a hint. Look at that financial. Excuse me. look at that financial commentary that Homeboy did, that cover page that they put on the top of their audit, page 1 of 2 of the PDF, and look at how they break out their numbers and see if you can start to see maybe what's happening on the IRS 990. So how do you think, what do you think account? Can you reconcile these differences? You may not be able to reconcile all of them, but hopefully you can get pretty close. So take a shot at it. Why do you think the revenue and expenses are different? How does this kind of change the overall financial kind of interpretation of the organization, if at all? And what do you think accounts for these differences? So again, 1 to 2 pages. I don't want War and Peace on this. So you should be able to kind of come to pretty quickly figure out what's going on here. And then next week, okay, we're getting into cash flow, money, cash, show me the money. And so Cash is King, chapter 11 of our Street Smart Financial Basics. There's a video there about how to create cash flow projections, because there's the statement of cash flows in the audit, which is fine. We're going to talk about that briefly. But what I really want to talk about more is cash flow forecasting. How do we project forward how much cash we're going to need over the next couple of months? So the video is going to be very helpful. This website, the Propel Nonprofits, their cash flow management. And again, this article from Nonprofit Quarterly, that's all available. Here are the links. So, next week, we're going to talk cash flow. All right. That's it for this week. 990, again, tax document, you really have to understand kind of where to look on that. And you have to do some different types of calculations in order to get the information that you need. But it's all there, particularly on the balance sheet. All right. So with that, that's our show for today. And I hope you all have a wonderful week. And I will be seeing you soon. All right. Take care.